Hi, and welcome to today's GreenTech presentation. We are taking a Nordic look today at the GreenTech together with our partners in Dette. That's why I have Carolina with me. She will join in the end of this presentation. She will do a short presentation of herself at that point of time. The program today, we will first take an in-flight view of the GreenTech sector, looking at some of the parameters really driving, as an investor, the important steps there. You look at energy prices, but especially the politics side today, and that's why we have Carolina, an expert. Maybe she will not say it herself but I want to say that on the taxonomy, a word we are hearing a lot as investors, but actually, what is it and how does it affect our investors and how does it affect the companies? I think in the coming years that's going to be important to understand. A little housekeeping before we start the presentation. We have 5 companies following our in-flight of the GreenTech sector. Every of those presentations will last around 15 to 20 minutes, 5 to 10 minutes Q&A, and then a 5 minutes break in the end where we will take the new presenter on the stage. You will just look at a pause screen, but you don't need to do anything. It will start up automatically again. But if we should start to take a look at the GreenTech sector, at my point of view, and as an investor, that's kind of the returns that is, in the end, the most important things. And what has actually happened this year is that looking at the thematic sectors, it's one of the worst performing sectors, the GreenTech. And even if we split it out, then it's a little bit evenly. Solar is doing better, but the wind, hydrogen, and uranium I put in here, that I think we need to think about that as a GreenTech sector. But in overall, one of the worst performing sectors, I'm not really sure I have a perfectly good explanation. I think maybe we are seeing a little bit hesitations from the politician side, not on the willingness, but on the specific side. And we had a last year with much more concrete or detailed, especially from the US, taking up some of the returns. We also have a sector that is harder hit by the supply side or the inflation, but that has actually come down on the raw materials and such stuff. And of course, we have a sector that needs to execute very big plans and not just doing some new program that they can put out. But if we should look at the parameters, driving it, the interest should be together with all the other growth sectors that we saw on the other side, that should have supported all. And actually on the GreenTech sector, as a reminder to us investors, GreenTech is a very large upfront payment on new technology that saves energy or produces energy and then cheaper in the end. So it's very capital intensive sector. So, the interest actually has 2 ways, both that it supports growth sectors on the valuation side, but actually also it should make a lot more economically, for the GreenTech. So that has come down, supported all the other sectors, actually not the GreenTech, and I'm a little bit baffled about that. If we look at another part that I also think is important on measuring, the political willingness, is the carbon emission price per ton. We have had a bigger peak. We almost got over 100. And that's a very strong signal. A lot of technologies will actually over 100 get pretty profitable. But it's showing us that after energy crisis, the fear of that the politicians, could not make it hard, make a hard price on CO2 and such stuff. We are back to a more normal level on the energy prices, the fear of the inflation side. So the politicians, are now thought again to kind of push this agenda also, and more than thinking about the inflation side. So that has also been symbolized by the carbon emission. I know there's a lot of politics going in, but I use it as a measure to how our investors, evaluating, will the politician make a price on CO2 and thereby supporting the green sector in the future. I know it's more technical than that, but it's kind of also, and then we have had the energy prices. I know a lot of up and down, and we will talk about OPEC, but actually they have also stabilized, and we can always discuss whether energy prices has anything to do with the future prospects of this industry, but actually pretty stable and with the interest. So I'm a little bit baffled, so maybe we in the end can try and discuss whether it's the politicians that are missing in this year. And if we should take the bigger look ahead, right, that's also what we always try and do as investors into a sector. I will talk a little about the energy prices, the political support, and then Carolina also will talk a little about the taxonomy and how is it looking, how is it moving ahead. And to me, I was a little bit baffled that the green energy or GreenTech or what we should put of labels of this broad industry. I know that we try to define one, but I know it's hard with a lot of the different business model. But for me, I think the OPEC just changed their long-term direction on how to behave, and that's why it will be discussed rigorously. I totally agree that it's also demand side and such stuff, but I think it increased the OPEC decision to cut this year. It increased the likelihood of higher for longer energy prices. Maybe we have lost a little bit faith in that as an investor in the GreenTech sector after last year, where we all said now it will move up. We don't know where the energy prices will, but we have had a move up in the curve of the energy prices. But I think the OPEC decision really kind of said that. And why do I think that? It's still around 2 million barrels in Q4 expected deficit. I know the demand situation can change with the risk of a recession or lower economic growth, but that's actually still what's in the card. And still they took a decision to cut those 2 million barrels. We will see how they will do it, but the kind of the signal in it. And in my head as a GreenTech investor, I think this is kind of also, I know it's short term, but I think it's also a long-term call to try and optimize the price on what they have in the ground. I've instead of the other part that has also always been there is that if they have too high prices too long, you will have the substitute technologies, i.e. GreenTech, for example, coming in. And they have always had to strike that kind of balance and try to do that. But for me, it looks with this decision, I know maybe we are overreading a short-term decision, but I also read a lot about this. It seems like they have chosen to say that they will not have the next 50 years, and that is of course debatable, to pull something out of the ground and sell it. So they want to optimize what they have in the ground and have as high as a price on that. And I think that's a positive for the whole GreenTech sector, because they will have a higher price. There will be more substitutes. They will strike that kind of balance and have chosen to strike that balance. And although I have tried to make it, and it was not a very long one, but I have also seen other studies that there's not that strong statistical, if you measure it, link between higher energy prices and GreenTech. And of course, GreenTech is not a new phenomenon, but it's not a 50-year where we can measure this in statistics. There's really no strong correlation between high energy prices and GreenTech performance. I think it's more political that is driving that. But in my head, it kind of makes sense that higher energy prices will also kind of support the GreenTech sector. So a plus here, and that's why I'm still a little bit baffled about the underperformance as such for the sector this year. The other one is the political side, and it may be here I am most baffled that the investors have not. There's a subsidy arm race kicking off between Europe and the America. We saw the German and the French leader meeting, and it's simply because that the US Infrastructure Act, with the green part of it, are simply trying to subsidize so heavily the GreenTech sector that they want to move the the supply chain, and which is important. And if they move the supply chain, they also move kind of the whole GreenTech sector to US. That means that all politicians now are in a kind of a subsidy war because they can't go into a trade war. And secondly, we heard it with Northvolt suddenly want to move to US. We heard it about the US regulation that a battery, a certain part of that raw material to the battery, it needs to come from the US, or else will not get the tax rebate. So the Europe needs to match this. There's no doubt about it, and that's also why very fast they came up with on the top of all the repower, the Fit 55, the repower came on they put this industrial plan up that is on top of this, and it's actually almost as big as the US. And I will get a little bit more into that. But as we can see, the political side is actually very strong. They have to do something, or else, the Europe, they have lost out on the last 10, 15 years where it has been dominated by technology, where we, with our regulation, have stopped building up that industry, where it has been left to the US, and that's why the US share market now does 60% of the world share market. Now, actually, maybe we were going into a decade where the Europe maybe were better positioned with the GreenTech sector, and the US, of course, is trying to move that, and the politician needs to react to that. So I haven't China with on here, but there's big programs everywhere. And Carolina will get into it, but maybe there's not that much concrete and details. That's, of course, the problem. And if you should look at the latest part that came in February, it's 4 pillars: simplified regulatory framework. It's easier to get approvals to put up big green energy projects. It's easier to get approval to build the infrastructure. The second part is to me maybe the most instant, faster access to funding. And the third one, enhancing skills. Of course, we need a skilled work base, but it's also telling people that investing in this one is job intensive. So that means that it's a good selling point for the politician. And then an open trade, and that I actually think we need to put in, because our supply chain or on the raw material side is very weak in Europe. But if I read between the lines, I think that we have put in some protectionism against the US, but not much. What is this interesting? But it opened up for higher government debt level. That our they also put in a new public-private financing, but that's maybe the problem, because here the clue is how we should really get this industry up and running. But there's not much concrete in it. This will use protectionism like the US, where it's possible, but still to protect the supply chain situation. So kind of not much more than we got in the Repower EU or the Fit 55, but a try to move up in speed and then try to be a little bit more specific on things. But what the industry says, the same way as always, they say missing out on concrete details in the plan. And I think that is probably true, and maybe that's why investors haven't reacted that much to this part. But to me, the willingness is there by the politicians, and they actually need to act, or else we will again lose out on a decade to the US if they got our supply chains moved in. So kind of, if I look at the framework on energy and political, it kind of looks like there is still a very, very strong support against the green tech sector. And that's maybe why I'm also still a little bit baffled with the interest coming down, that this is a growth sector. I can explain that the energy prices has gone lower, the supply chain, the execution, now the reality meets the rubber, right, on the earnings side, which is not going to grow as fast as someone maybe had hoped. But looking at the long term, I think the political will is there. And now I will let the word over to you, Carolina, and try and put a little bit on this taxonomy. I have always just presented it with with the take that this is the way, if there's a politician success here, they will move a lot of money into the GreenTech sector without having their own wallet up their pocket, right? Because they're going to push investors in one direction and hurt companies if they don't go in that direction. But that is all what I actually know about it. So now I will let me be a little bit wiser on this one. So I will hand the word over to you, Carolina, and you can present yourself.
Okay, thank you. So I'm Karoliina Loikkanen. I'm heading Indholdet ESG Solutions, and I'm quite glad to take over and tell a little bit about the European Union taxonomy. I know that it starts to be quite familiar to all of you, so I'm not going to go into details, but I'm going to give you a kind of a brief update what's going on, because we are sort of expecting to have two major developments during this year. So the first one of those developments is related to the amount of products and range of products which will be covered by the European Union taxonomy. And the second part is that we're not talking about products anymore. We are also talking about how the products are produced. But let's take a brief look at why the taxonomy was developed. Well, it was developed to get investors to fund and support green technologies and thereby boost the Green Deal forward. So far, we have not seen that much development on that, but I will talk about that a little bit later. But let's come back to those 2 points I just referred to. So the first one, the products covered. So far, companies have been obliged to report the percentage of revenue which is sort of aligned with the taxonomy criteria. So European Union is setting criteria which products are to be categorized as green, and the companies need to report which part of their revenue, OPEX and CAPEX is kind of aligned with those criteria. Now we have seen that the first draft of the updated taxonomy has been published, and we are sort of expecting it to be finalized during summer, which would in practice for investor mean that more sectors and more products would be covered by the taxonomy. So far we've sort of seen that there are, for example, maritime transportation covered by taxonomy partly, but then there are, for example, information technology totally missing from the taxonomy. And I hope that with the updated part, we're gonna witness the more sectors be covered, and thereby we're going to also get a little bit more understanding that what products and which solutions are defined as green by European Union politicians. Then the second development part was about how the products are produced. So previously, like a few years back, we thought that in order to be taxonomy aligned, it's enough that the product is sort of aligned with certain environmental criteria. But now we have got a little bit more clarity on the kind of framework, and we know that that's not the case entirely. Rather, the taxonomy also comments on how the products are produced. And we got a little bit more clarity on that as well, the details, and we expect that we're gonna hear a little bit more about how companies are kind of developing their operational models to be aligned with the taxonomy. So that's sort of a brief recap. And if we think about the impacts of the whole taxonomy, the point was to direct funding and finance to green technologies. And what we have seen so far is that there are no significant impacts on the cost or availability of capital currently visible for those companies which are having quite high taxonomy percentages. There are a limited amount of companies who have been reporting that their funding has been in a way or another linked to their taxonomy operations, but that amount of companies is still rather limited. Once the taxonomy will be broadened and we have now got more clarity on many details, we expect that the percentages will be increasing, and thereby we also expect that there might be some kind of bigger impact on the cost of capital or availability of capital for those companies. But that's kind of a development we are expecting to have during the next 2 or 3 years. The last point, which was mainly kind of a reflection of everything Michael just pointed, is that the taxonomy is also a list of products and solutions which could be in a way considered rather safe from the Green Deal perspective. So our assumption is that in case the product or solution is on a taxonomy list, it is an indication that there would be no kind of a broader political surprises for that sector, because there are already kind of a preconditions for the solutions or for the products that they are already defined as green. But there's politics, and like Michael just kind of pointed out, everything can happen. But this is our current assumptions. Michael, we cannot hear you. You are muted, I think.
Can you hear me now?
Yes.
Perfect. I will direct this question to you, Karolina, from the audience. Do we have a feeling of which sectors and industry that have the biggest investment opportunity from the EU taxonomy? You know, is it sector industries, or do we really need as investors to dig a little bit deeper down to look at the company per se, you know, and look, if we start at the sectors, industries, do you have a picture on where you think where the biggest benefit will be?
Wow, I would say that the taxonomy currently covers the most emitting sectors, of course, and the new draft will kind of broaden that coverage. So of course that limits the number and types of sectors to sort of quite energy intensive sectors, so energy production, manufacturing of certain products, transportation, for example, just to point out a few examples. But in terms of benefiting from the taxonomy, I would say that the investor really needs to take a look at the company level and take a look at the disclosure, because I would say that, of course, the taxonomy is not the only parameter defining the funding. So this is one aspect, one additional aspect to the current requirements, and it most probably will give some benefits, but we will still wait and see that what is the scale of those benefits in relation to other parameters used.
Yeah, if I understand you correctly, it's also how I looked a little bit. I know it will be pushed in general, and technologies will be supported, and that's very good, because then we can take a little bit more technological risk as investors. But I feel, you know, looking at it right now, it's more, we should, as investors, the first part, we should more look at who can get hurt, you know, and then if we understand who can get hurt, then we understand who needs to do the investments, and thereby which technologies might benefit in the end. Is that correctly understood? If, you know, it's more like I need to most aware of this as investors, what can get hurt first, and then maybe we'll be a little bit wiser down the road on what it will benefit.
Yeah, in concrete terms, I would actually encourage everyone to monitor the development of the taxonomy percentages, because right now we are only seeing the kind of the first part. But going forward, we will see whether the taxonomy percentage is going to be increased or whether it's going to stay at the level it is today. And just like you said, in case the taxonomy percentage will increase, it's sort of indicating that those sectors are kind of promoting those environmental objectives that the European Green Deal is about. And in case the taxonomy percentage is not increasing, and you are on a sector which is energy intensive or emitting a lot of carbon, then of course you might be seeing a kind of a increased risk going forward due to the increased willingness to push the Green Deal forward.
Perfect. Thank you, Caroline. We run out of time. I think we should do an event just on the taxonomy at one point in time. Maybe too nerdy for a big public, but I think investors actually should be aware of that. So thank you, Caroline,
Thank you.
for